Personal finance, number 5. 5-minute introduction video is not going to go that deep. We left off with property taxes. There's two camps. You're either in the camp of taxes are good, they pay for stuff, and the government helps us, yay, yay, yay. Or you're in the other camp of taxes theft. You have no right to just take money from me. You have no right. There is no right whatsoever for you to just walk in and steal my money. Regardless of whether you're making people's lives better, it's my money. So it's, yay, government, take my stuff because you're going to save the world. Or it's mine, please don't take it. Those are the two places you're going to fall. Typically, I am under the idea of taxes theft. And this is another example. If you own a house, and here is a bill, it's kind of complicated, but guess what? A lot of the financial stuff that you're going to look at in your life, it's going to be complicated. It's going to take some time. You're really going to have to go over it and over it and over and over it. And there's a perfect example of like, what's going on this screen? Yes, some of the more difficult personal finance situations that you get in, it's going to be a lot of paperwork. It's going to be numbers mixed around. But in that moment, you have to stop and look at the paper and make sure that you know what you're doing. Make sure that no one is taking advantage of you. Slow it down. So let's look. Homestead is the area this person lives in, and the house is worth $474,300. Nice house, nice area, very expensive house. Then what we do is find out how much, because you have a nice house, do you have to give to the government every year, because they're taxing you for having a nice house. That's right. The government is saying, you got a nice house, you need to give us a lot of money. If you live in a terrible house, then you still got to give the government money. It's just less money that you got to give. And so if you look through the numbers, you can see different tax rates here. Here's a good example of a 1% tax rate. So 1% of $474,000, we'll just round it off. So 1% of $474,000. 1% of $474,000, almost $500,000, really. $500,000. 1% of $500,000 is $4,743. What is that? That's your taxes. Every single year. That's right. If you live in a $500,000 home every year in this area, it depends on where you live, how high your property tax is going to be, but every year you're cutting the government a $5,000 check. Straight cash homie. Every year that you are going to live in that house, even when you've paid off the house, every year, $5,000, $5,000, $5,000, $5,000. I hope that you're earning $5,000. I hope that you have a big paycheck every year, because part of that paycheck, $5,000. That's just your property tax. We're not talking about your income tax, the sales tax, other taxes, the tax on your car. Right here, $5,000. Throw it over to the government. So, going back to my original point. You're either, yay, government, take my $5,000 every year for the rest of my life, even though I'm retired and I'm living on a fixed income, $5,000. Or, look, I'll pay $5,000 a couple times. I'll pay $5,000 30 times. But at a certain point, you got to stop. How much? You just take and you take and you take. That's property tax from my point of view. A tax return is a form filled with a taxing authority that reports income, expenses, and other pertinent tax information. Tax returns allow the taxpayer to calculate their tax liability, schedule tax payments, or request refunds of the overpayment of taxes. Every year in April, you will file your tax returns. You can do it electronically. You can do it on paper. You have seen this paperwork, and basically you fill in how much money you have earned, if you have deductions, if you have kids, if you have houses. You go through a bunch of stuff. Most people do this online now, and the online system just asks you questions, and you go through step by step by step. It's like, hey, did you do this? Did you do that? Check, 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 check. And at the end, it calculates everything for you, runs all the numbers. And then it says, you owe $10,000. You owe $10,000. You haven't paid enough in taxes. The government hasn't gotten enough out of you. They haven't squeezed enough. They're going to take more and more. Some people are lucky and they find out, no, guess what, folks? The government squeezed you too much. The government shook you too much and stole too much of your money. And the government actually has to give a little bit back to you. Only if you turn in this paperwork, because if you don't do this paperwork correctly, the government's not going to tell you that they accidentally or intentionally took all your money. That's right. So you got to make sure that you fill out your tax returns and you find out that, oh, hey, guess what? The government stole too much. You got to give some of it back. But you got to do the paperwork right to prove that they stole too much. Otherwise, they're just going to steal too much. Sorry, hey, The different personal finance teachers are going to teach this in a different way. This is the way that I'm going to teach it because I'm trying to teach you to be a better, more responsible citizen so that you can do well for yourself, so that you can take care of your family, so you can take care of your community. You got to keep as much money as you possibly can. I'm not saying don't donate, but if you can keep the money in your pocket, then you can donate, then you can do charity, then you can help people out. I would rather you help your community than the government in Washington, D.C. try to pretend to help your community. How often does Washington, D.C. come to your community and help out? Probably never. But you can help your community if you have money in your pocket. And the only way you can have money in your pocket is by being financially responsible and knowing the game.